Okay, traders. Yes, welcome to a quick market outlook on gold. So this is Gold Spot, and it is analysis for the coming weekend. This will be from 9th to 13th of Feb 2026. So it is a top-down analysis from monthly time frame. Then I'll be going down to the 4-hour time frame, and in this analysis, I'll be pointing out key levels of support and resistance. I'll be reading the candles and the candlestick patterns, and also I'll be counting the waves. The Elliott waves actually. So now in 4-hour time frames where I provide those key entry levels to consider for trading in the coming week. So make sure that you watch this analysis until the 4-hour time frame. So in monthly time frame, actually we can see clearly the Jan candle actually pushed straight to the upside, and is one of the strongest candlestick in history. And at the end of the month, actually market pushed to around the 50% of the movement to the upside. So this is beautiful, showing a sort of balance between buyers and sellers around this region. And then on the Feb candle straight to the downside, we see there was a stronger push, and this seems to be a retest to around these regions down here. We see these levels. So the Jan candle broke above, then the Feb candle is like a retest. So in this way, looking closely on the monthly time frame, we can just highlight a possibility of price continuation to the upside. So that is an overall picture. And also looking on the wave counts, we have a sort of 5 wave to the upside in completion of the 3rd wave. So in lower time frames, possibly we may see some chances for slight continuation of price push to the upside. Then straight in a weekly time frame, let us see what's happening. So in weekly time frame, price has been playing within a channel. So we see the upper channel and we have the lower channel down here, and price created this push now to the downside. And the possibility, or the concept here, is just a retest to this level down here, because this level was respected several times in the past. So this push to the downside, it seems to be a simple retest to this region. And to the upside, price has already touched this level, so we may still expect a continuation of push to the upside in completion of the final wave to the upside. And this final wave is just based on the idea of having 5 wave push at this region, because these other previous waves already had a sort of 5 wave push to the upside. So here we also expect to have 5 wave push. So the final wave can have anything, a truncation, or may straight push beyond this historical high. So in lower time frames, we'll see exactly what market is expected to do around this region. Then straight in daily time frame, let us see what is happening. And in daily time frame, we have initiated another new channel. So this channel suggests a possibility of price hitting this upper level here. So we may still expect for the possible push to the upside in completion of what we expect to be the 5th wave to the upside. And now looking downward here, we see price beautifully retested this region, and there was a confluence of those two lines here. So this is beautiful. And now currently we may expect this beginning of this move to the upside is just a 1-2. This is possibly going to be the 1-2, and then we may be looking for possible continuation of this 1-2 to the upside during formation of the 3rd wave. So that is an highlight in daily time frame. And finally, in 4-hour time frame, what is happening? Yes, so 4-hour time frame has got most of the details. We see the levels of support and resistance, we see the wave counts and the projection by itself. So basically, now forget about this. This is like an alternative thing. We see we have 5 wave push to the downside. So the concept here is, if price will push to the upside without breaking the historical high, and then build a bearish momentum, so we may expect this current push to the upside to be a corrective. So this is an alternative, but don't consider that. So the primary projection will be considering the possibility of price push to the upside, and the idea here will be we have this beginning 5 wave, then we have this correction to the downside. So basically price is expected to move strongly to the upside in the coming week, during formation of what we call the wave 3, or it may be wave C to the upside. And now looking more closely, we have those two levels here. We have this level of resistance and we have this level of support at the current price market. So price moving outside of this level of resistance will create a powerful chance of price pushing to the upside, and we may try taking high risk buy opportunities around this region, now around 4808.22. so we may take some high risk buy opportunities here. But when price closes above this region, now around 5086, now this will be a high probability, now the low risk buy opportunity. So we may take those buys, and actually we'll be buying up to the historical high, but in most cases the greater chances for taking the safe buy opportunities will be up to around the levels of 5380.94. so around those regions is where we may just buy with confidence. But for the rest of the levels of resistance, actually there's less chance of price touching those levels, but in a bigger picture we may expect the price may create a new historical high. It means it may move beyond this historical high level. So that's the overall concept, and that is how you are going to trade in the coming week, is just by focusing those key levels of buy opportunities and targeting the levels not beyond the historical high unless we see prices breaking above the historical high. So we may continue taking some buy opportunities with the short targets. Thank you for watching, and make sure that you like and subscribe to our channel, and also share this video so that other traders can get this concept that can be very useful for their trading decisions in the coming week. Thank you and have a powerful weekend.